Andrew Jackson once expressed that if the people only understood the rank injustice of our money and banking system, there would be a revolution by morning. This statement predates the creation of the Federal Reserve, and since its establishment, the banking landscape has transformed significantly, becoming even more advantageous to the wealthy. The issue lies in the fact that most people lack comprehension of how the system operates. They remain unaware of the intricacies of money creation and the inner workings of the Federal Reserve. Consequently, only a small minority reaps the benefits, while others suffer. Henry Ford also expresses a similar sentiment, emphasizing that it might be for the best that the nation's citizens remain oblivious to the complexities of the banking and monetary system. He believed that revealing this knowledge could potentially lead to a revolution. So in this video, let's unveil the hidden truths that banks don't want you to know. What secrets are they concealing? And what crucial information should you be aware of to make the system work for you? But before that, let's enhance your financial knowledge and join the ride on the Richest Roadmap channel. If you're ready to improve your budgeting skills, set financial goals, and work toward financial freedom, hit that like button and subscribe to our channel. Don't forget to leave a comment, ask a question, or offer a suggestion about our videos, because we genuinely enjoy interacting with you. And now, let's get back to the topic, unveiling 5 hidden money facts banks keep from you. Number 1. All money is debt. All money is actually a form of debt. But have you ever wondered where this paper money comes from? It's not as simple as printing it like newspapers. In the past, money used to be backed by gold and silver. But today, it's different. When the government needs money, it borrows it from the Federal Reserve, creating it out of ink and paper. The government then spends this money on various projects like building schools, hospitals, and bridges. This is how money enters the economy. People who receive money from the government usually deposit it in banks. The banks, in turn, lend most of this money to others at a higher interest rate, making a profit. Because when you deposit money in a bank, it doesn't just sit there idle. Instead, the bank uses a significant portion of your deposited money to lend it to others who need loans, like individuals or businesses. This is how banks make money, by charging interest on these loans. But here's the intriguing part. Around 95% of money is not physical cash. It's just digits in computers created by banks. When you deposit money in a bank, they don't keep all of it safe. Instead, they lend a significant portion of it to others while keeping only a small fraction on hand. So, this is how around 95% of the money we use is nothing but digits in computers, created through the process of fractional reserve banking and lending. It's a crucial aspect of the modern financial system, but it's also essential to understand the implications it can have on the overall economy. And what's even stranger is that the initial money created is given as a loan to the banks and the government. This means that they have to pay back more money than what's originally created. It's like an ever-increasing debt that can never truly be paid off. But the question is, number 2, who owns the Fed? To understand how the Federal Reserve, or Fed, was created, we need to go back in time. In the 19th century, the United States faced financial turmoil, especially after the Civil War. Unlike many European countries, the US didn't have a central bank to manage financial crises. In 1906, a famous banker tried to manipulate the stock market, but his plan failed, causing several banks to go bankrupt. The news of bankruptcy spread, and people rushed to withdraw their savings, leading to a stock market crash. During this crisis, A wealthy banker named J.P. Morgan stepped in, investing his own money in struggling banks to restore public trust. This incident made the U.S. realize the need for a central bank that could intervene during such situations. However, creating the Fed wasn't easy. It involved different parties with opposing interests, including politicians and wealthy individuals. Eventually, a group of over 100 wealthy Americans gathered on Jekyll Island, Georgia, and decided on the structure of the Fed. In 1913, the Federal Reserve was established as a network of 12 banks spread across the country. Each bank is required to keep a portion of its capital in the Regional Reserve Bank and, in return, owns shares in that bank. This means that the Fed is, in a way, owned by the other banks in the country. Some may view this as a rigged system where big banks control the source of the dollar. However, it's important to note that all major banks in the US are public companies. By buying their stock, anyone can become an owner of these banks, and, indirectly, an owner of the Fed. Number 3. Your bank is not your financial advisor. It's crucial to understand that banks are profit-driven companies, and their primary goal is to make money for their shareholders. They might offer products and services that benefit them more than they benefit you. While there may be times when your interests align with theirs, it's essential to be cautious. Even though bank employees may seem friendly and well-dressed, remember that they are trained to sell you their products and services. So, don't rush into any decisions. Take your time to think it over, and don't feel pressured to accept anything immediately. Always compare rates and offerings with other banks to ensure you're getting the best deal. Don't be swayed solely by how nice they treat you, as that kindness might come at a significant cost in the long run. Number 4. The wealthier you are, the lower the fees banks impose on you. As banks have evolved, the way they treat different customers has changed as well. In the past, the main purpose of banks was to take money from those with extra funds and lend it to those in need. However, the financial system has evolved, and today, the wealthier you are, the more favorable terms and benefits you may receive from banks. You are living paycheck to paycheck, banks might not see you as a highly valuable customer, since they can't make much profit from your limited transactions. They may offer you basic services, like a small mortgage or a credit card, but not much beyond that. On the other hand, when you are a billionaire or extremely wealthy, banks are eager to attract your business. They may provide you with more favorable terms on loans, lower interest rates, and exclusive benefits. Banks hope to have you as a customer to increase their deposits and gain the prestige of serving high net worth individuals and their businesses. Number 5. A bank is for storing money, not investing. In the past, lending money and earning interest used to be profitable, but things have changed. Nowadays, banks offer very low rates, making it difficult to get even a 1% return on fixed deposits. Instead of considering banks as investment tools, it's best to view them as institutions for managing and safeguarding your money. If you're still keen on keeping your money in a bank and want to potentially earn higher returns, consider buying stocks of the bank itself. For instance, you can invest in stocks of banks like Goldman Sachs, which pays a 2.1% dividend rate. This rate is much higher than what you would typically earn from fixed deposit rates. Moreover, by investing in bank stocks, you not only stand to benefit from potential stock price appreciation, but also become an owner of the bank, which can be a rewarding long-term investment strategy. So, while banks may not be the best place for high investment returns, they can still be valuable for managing and securing your money. If you desire better returns, exploring opportunities in bank stocks could be a more fruitful approach. There you have it, the 5 hidden money facts banks keep from you. By recognizing the intricacies of the financial system, you can better navigate the banking landscape and protect your interests as consumers. Thanks for joining us today. If you found this video helpful, give it a thumbs up and share it with anyone who might benefit from it. Don't forget to like and subscribe to our channel, Riches Roadmap, for more valuable insights and financial advice. Keep taking charge of your finances. And remember, the road to riches is just beginning. See you in the next video.